Right, here's a thought experiment. What if one day Congress, in their infinite wisdom, said that all supermarkets have to change the way they do business? Okay, and when you get to the checkout line, uh, the, the person at the teller has to say, okay, we're looking at all your receipts here, and you've bought, in aggregate, you've bought this much protein, and you've bought this much fat, and this much carbohydrates, and you've had so much sugar. This is how much sugar is in your cart. And and maybe they also say, okay, you have this much, you bought a nice piece of meat, and how many people is that for? That's for 4 people. I think you got a little too much. Okay, I can go on with the extended analogy, but the point is, if you made that kind of law, every supermarket in the country would have to change their systems. They would have to find out, well, okay, if we need to get all that information, we have to reach out and find it earlier in the process and then bring it up to the cash register at the point of sale and be able to aggregate all that stuff in there. It would cost a lot of money. Now, you would figure the big supermarket chains would grumble and groan, and they have the IT budgets, they figure it out. Costco, they figure it out. Walmart, they figure it out. Target, you know it. So, and all the big supermarket chains as well. The little guys, if they're under those same constraints, what do? They probably go out of business. Now, a similar thing is happening in the banking industry, I'm sorry to say, where you have basically 5,000 pages of regulations as part of Dodd-Frank that mandate how the whole mortgage market is supposed to change. And things like RESPA disclosures, truth in lending disclosures, APR, all of the calculations are changing, and the timing of when that information gets presented to the potential home buyer, that also gets changed. So it's not a perfect analogy with supermarkets, but the effect is essentially the same. Everyone in the mortgage market has to redo their systems to meet the new regulations, and a lot of these regulations haven't been written yet. So the problem is a lot of people are going to get out of the game, or they're going to have to basically throw out all their systems, take a big write-off, and buy something off the shelf that seems to work for them. And so this jives with an article I saw in today's paper about Bill Dudley, president of the New York Fed, has said the concentration of mortgage origination volumes at a few key financial institutions meant that banks were not passing on low interest rates to borrowers. Well, okay, if you make things very difficult for smaller mortgage companies to stay in business, who's left? The big guys. Less pressure to compete means higher prices for you. Now, look, I'm not one of these guys that is all anti-regulation. I think there's a great role for regulation, especially in the banking industry, considering what they put us through and considering their role in the economy. It's an essential part of the economy. It's not something you can just have a laissez-faire approach to and let them go in business, go out of business with your money and with our liquidity. And not to mention they have a backing of implicit backing. They get bailed out every time they're in trouble. So yeah, you have to be regulated. The question is how much and how you implement it. To basically say we're going to take the mortgage market as it's structured today and move it to an entirely new model, in the space of a couple of years, without good defined steps in the middle, without migration paths, without a way to make the incentive set up that the banks will want to do these improvements. And you could do these through tax. You could do these through how Fannie and Freddie purchase mortgages. I just don't know if this has been really thought through as great as it should have been. And so that's where we are. I think if we're going to get to the point where there are mortgage originators competing for your business in a process that is consumer friendly, you got to do it with a carrot